This content is for educational purposes only and is not financial advice. Any results shown are illustrative, not a promise or guarantee of similar outcomes, and individual results vary. Options trading involves high risk of loss.
Hello, in today's video we'll be taking a look at the Thursday, August 13th trading session for the SPX CBOE index. We'll be utilizing three different indicators from Day Trading GPS to make our trades. First off, the SPX Daily Key Levels V3.0 indicator. Second, our ribbon V3.0 multi-reset moving average ribbon. And then thirdly, our special VWAP for SPX CBOE and XSP, the SPX mini index. Okay, so in today's video, we're going to do something a little different than our normal video. We're going to look at today with the 1 minute chart. We've received a lot of requests from viewers who prefer to trade on 1 minute charts, and our normal videos we show 2 minute charts, so today we're going to use the 1 minute chart. The recommended chart time frames for utilizing the daily key levels option trading strategy for SPX are between 1 minute and 5 minutes. So either the 1 minute, 2 minute, 3 minute, or 5 minute chart time frame. Our recommended chart time frame that we find the most consistent results is the 2 minute chart time frame. However, you can utilize anything between 1 minute and 5 minute. In today's session, we're also going to look at the three different option strikes used under the standard daily key levels trading strategy, and we're also going to look at the early session lotto options trading strategy. This video is going to be a condensed video. We're not going to go into all the different aspects about the indicator. We are going to go over how the strategy works and the different strikes, targets, stop loss levels, etc. But we're not going to go into all the different features about the SPX Daily Key Levels Indicator in today's video. If you would like more information on some of the various features that are included that we're not going to go over with today in this video, just simply look in the description of this video and you will find a link to a video which shows the new features that were added to the V3.0 version. And you can go watch that video. It's broken up by chapters, so you can go to the link for that video, look for specific features and chapter to just go to, and look at all the different features that are included with this particular indicator. All right, so in today's session, first off, we'd like to start off with the VWAP indicator. So you may be wondering why we have a special VWAP for SPX CBOE, and that is because the native VWAPs on TradingView do not work on the SPX CBOE, which is the official SPX index that everyone follows, and the native VWAPs also do not work. The native built-in VWAPs on TradingView also do not work on the SPX mini index, the XSP. So first off, we'll just show you that real quick. We have our VWAP turned on right now. We'll just go ahead and hide it. We'll go into indicators. We'll go into technicals built into TradingView. We'll go down to volume weighted average price, which is the built-in VWAP. And then we'll also try VWAP auto anchored. You'll see here that you have a red exclamation point for both of those, and there's no VWAP on the chart. So it's not a TradingView platform issue. What it is that the CBOE global indices feed for both SPX CBOE, the main SPX index, and also the XSP, which is the official mini index, the global indices feed from CBOE does not provide volume data, so therefore VWAPs do not normally work on TradingView. However, our VWAP does work because our VWAP references an external institutional grade data source for SPX, and so ours does include the institutional volume data, and so we have the VWAP here. The main VWAP line here is shown by this blue line here, and then these are the VWAP bands above and below. Okay, So we'll just go ahead and remove these for right now. Okay, so the SPX Daily Key Levels Indicator works on 3 different symbols. The SPX CBOE, it also works for those people that prefer XSP, the mini SPX index. It also works on that symbol, and it also works on a third symbol, which is the SPX 500 ACAP. The SPX 500 ACAP is for those who prefer trading SPX through a Forex broker via a Forex CFD and are not trading SPX options. So that would be, for example, for people who are trading, say, a Forex-based trading challenge, which basically, if you're taking a Forex-based trading challenge, or you have your own Forex live account, then you'll be trading a Forex CFD version of SPX. For those trading SPX options, you would use the indicator on SPX CBOE. For those trading mini SPX options, you would use it on the XSP symbol. Now, the way this indicator works is that every day at 9:30, at the first tick of the 9:30 a.m. Open, you will get your auto-updated key levels on your chart for the SPX CBOE chart or the XSP chart. If you'd like to see the levels 30 minutes before SPX opens at 9:30, then you can open a second chart with SPX 500 ACAP, the Forex CFD, and at 9 a.m., 30 minutes before the SPX CBOE open. When you're viewing the indicator on the SPX 500 ACAP chart, then there is a second table like you see here. You'll have one table for SPX 500 ACAP. You'll have a second table up here for SPX CBOE, and that will give you the SPX CBOE levels at 9 a.m., 30 minutes before the open. The reason that you can't see the levels before the 9:30 open if you have this indicator on the SPX CBOE chart or XSP chart is because on TradingView, PineScript, even if your indicator already knows, like in the case of this one, what the levels are at whatever time before the market opened, in this case it's 9 a.m., you can't plot the levels on the chart until 9:30 a.m. with the first tick. So while a market is closed and SPX, CBOE, and XSP are closed until 9:30 as they don't trade in the pre-market or overnight. So if you do want to see the levels before 9:30, you can do so by simply opening up the SPX 500 ACAP chart, and then you can see the SPX CBOE levels via that second table, and you get a kind of a jump on your day as far as looking at your strategy for the upcoming session 30 minutes before the open. Okay, so what you're going to get on your chart, on the SPX CBOE chart, is you're going to get the main key levels, the SPX Bull Bear Key Price level, which is the KPL, Bull Bear KPL. You're going to get your main R levels above, R1 through R6, and main levels below S1 through S6. So if you can see here, we have all 6 levels here, but we zoom in by grabbing on with left-clicking your mouse and holding onto the price axis and zooming out to get a more granular view. You're also going to get the pre-market high, so this indicator does calculate even though the SPX CBOE is not open. For pre-market or overnight, it does calculate the pre-market high and pre-market low for SPX CBOE as well as XSP. And it also gives you the YDH, YDC, and YDL levels. Those are yesterday's RTH session high, yesterday's RTH session low, and yesterday's RTH session close. Those are known as the contextual levels. You will also get the market scenario for today. Today's market scenario is top overhang, poke above. SPX can only open up in one of 6 different market scenario structures. Today is market scenario 4. We also have an analysis table for the market structure if you want to view that on your screen, which will give you key trading characteristics and common tendencies of the market scenario in play. For today's session, you simply go down to User Control Panel, and then you click on Show Market Scenario Table. And then you will get this on your chart. It shows you basically different risks to look at during the session, explanation of what this market scenario means, common tendencies of this particular market scenario, and key trading characteristics, and also which of the contextual levels are most important in this type of market scenario. If you don't want to utilize this on your chart, because it does take up a fair amount of space, in your user guide and manual, if you decide to subscribe to this particular indicator, you get a link to the PDF one-page cheat sheets for all the different market scenarios. You can simply reference which one it is for today, and then pull up the PDF on your screen on a separate chart, or you can simply print them out and just view them at your desk if you don't want to utilize the on chart one. Like I said, if you want to know more information about the market scenarios and other aspects and features of this indicator, simply look in the description of this video. You'll see a link to the features video on this particular indicator. Okay, so we're on a 1-minute chart. We have the open here, which is the 9:30 a.m. open. We have our BBKPL alert. The BBKPL alert is found here in the user control panel. Go down to the alert section, enable BBKPL 9:30 opening candle close alert, candle close above or candle close below alert, and apply range filter. The range filter will enable alert only fires of 9:30 a.m. candle close is within acceptable range of the BBKPL. So this is a special alert for the 9:30 a.m. open to give you an alert for the initial bias of the session. The range filter basically means that the candle must close within a specific range or less outside of the bull bear KPL to be a valid entry signal either for a close above bullish or a close below bearish. If it is outside of that range, then it will not fire the signal as it is too far away, either above or below, to be considered for a trade, at least on the opening candle. There is an advanced alert system for all levels in this indicator as well, and that is also covered in the features video, which I referenced earlier, if you'd like to see more information about all the different alerts and how they work. Okay, so as far as trading with this particular indicator, what we're looking for is two different things to happen for a valid entry. The first thing that has to happen is a candle close above or a candle close below either a main key level or a contextual level. The main key levels are the bull bear KPL level, the R levels above, the main R levels above, R1 through R6, and the main S levels below, S1 through S6. Contextual levels, again, we went over those here. For taking trades off of any of the main key levels, you have a built-in stop loss system, which are the QL levels and the midpoint levels. So on a bullish trade off of a main key level, the tight stop loss is the QL level below that level, and the midpoint level below is the standard stop loss, as you can see here on this particular trade. The trade for today's session was based on the bull bear key price level. Here's a tight stop loss, and here is the standard stop loss. It works the same on the other levels. If it was instead a bearish trade, then the tight stop loss would be QL above BBKPL, and the standard stop loss for a bearish trade off the bull bear KPL would be the midpoint above. You have QL levels and midpoint levels available for each of the main key levels. All of them do not come turned on by default out of the box, but you can turn them on in the user control panel, and you can set whichever ones you prefer to have on as the default for your own default preference. The reason for that is because at most times at the beginning of a session, the level that's typically going to be in play at the beginning of a session is going to be the bull bear KPL. However, with this indicator, you can take bullish and bearish trades off of any of the main key levels, not just the bull bear key price level, and you can also take bullish and bearish trades off of any of the contextual levels. If you're going to use the contextual levels for trades, you simply go into the user control panel and you go down to that section for stop loss and take profit levels. For the contextual levels, you'll have a bullish entry section, and then that is followed by a bearish entry section. And within those sections, for each particular contextual level, you can enable the stop loss and take profit for that. And you choose between standard and tight. And then it will show you the level for the tight stop loss or standard stop loss for that particular contextual level. And then you also use your select your take profit, which you can do anywhere from 0.25 all the way up to 30. The default is 2 as far as risk to reward, $2 of reward for each dollar of risk. However, you can set it lower than that, or as I said, you can set it higher than that all the way up to 30. Okay, so in the opening candle here, we have the 9:30 a.m. opening candle closing above the bull bear KPL level. However, we're not just going to go on candle closes above and below. That is part of a two-part system. The second part is we must have confirmation from the ribbon indicator. So on a bullish trade, confirmation from the ribbon indicator is we must have an all green ribbon to go along with the candle close above the main key level or contextual key level. We're not looking for a multicolored ribbon. We're looking on a bullish trade for an all green ribbon, and ideally for the upper bands of the all green ribbon to be pulling away from the base. Now, this particular ribbon has a session reset. It has session resets, different session resets for indexes, stocks, ETFs, futures, Forex, as well as global markets. If you happen to trade Asian markets, or you trade European markets or Indian markets, etc., then it has separate ones for those. If you trade stocks that are located in those markets and not U.S. markets, or you're trading indexes in those markets, etc. So in the case of indexes, we only have one reset for that, and that is the 9:30 a.m. open. We have the reset on now. If we turn the reset off, then you'll see what a standard ribbon normally does, and the standard ribbon has this hangover effect from the previous day's close, which in the case of indexes can be quite significant and oftentimes can give you wrong reads at the opening because of this hangover effect. So this ribbon allows you to turn this reset on, giving you what's really going on at the open, especially for seeing continuation moves or reversals right off the bat. Another advantage of this particular ribbon indicator is that you can utilize it both ways with the ribbon reset on and reset off. So if you'd like to use a dual monitor or a split screen, then you can see the ribbon with the reset filter on and then also off if you prefer to have dual confirmation. Now the confirmation here is going to be on the 9:31 a.m. candle. So this is the 9:30 a.m. candle. It does close above. However, in using the reset, when you're using the reset, you're not going to be taking a entry off the 9:30 a.m. candle if you're going to be using the reset, because it's resetting at 9:30. So your first opportunity is going to be the second candle or a candle after that, once we're seeing what exactly is going on. So in this case, we have the 9:31 a.m. candle. It also closes above the bull bear key price level. And in this case, we do have an all green ribbon. And as you can see, the upper bands of the ribbon are pulling away from the base of the ribbon. So that is our entry signal confirmation for this candle, the 9:31 a.m. candle close here. Now, as far as option strikes on the standard daily key level strategy, there are 3 different option strikes to pick from. The standard play is going to be the at the money strike closest to the level that you're basing the trade on. In this case, we're basing the trade on the bull bear KPL level, 77.6257, so that's going to be the 77.65 call. There are 2 other strikes you can choose. How you figure that out with this indicator is you take the level that you're basing the trade on, the direction of the trade, in this case up, such as a bullish trade. You go to the first midpoint above, that is going to be your second option strike you can consider. So the strike closest to this midpoint level, 77.7116, that's going to be the 77.70 strike. The final strike is the furthest away is going to be the strike that is 1 full level away, 1 full key level away from the level that you're basing the trade on. In this case, bull bear KPL, bullish trade looking up 1 full key level away, R1, 77.7974. So that is the 77.80 strike. Now, regardless of which strike that you're going to use, the stop losses are going to be the same. So your initial entry stop loss is either going to be using the tight stop loss to QL below, which is this level here, or using the standard stop loss, which is the midpoint below. So in either case, on either one of these 3 strikes, you're going to start off with a level-based stop loss. When you do any stop loss adjustment later, then you're changing to a price-based stop loss. And as we'll see when we get to that section about adjusting trades once we have met one of the target levels for adjustment or exit. We'll get into the early session lotto option trade after we finish this, and we'll show you the strikes for that. So we're going to start off here with the standard play. The standard play, the 77.65 call. Okay, 9:30 a.m. candle close. The ask price for the 77.65 call option, $12.90 on the close of the 9:31 a.m. candle. Now, what about targets for adjustment or exits? There are a couple of different targets to choose from. It just depends on which initial target you'd like to utilize for your exit or adjustment on the trade. Starting off with just a regular scalp trade. A regular scalp trade is a 1 level move in your favor. The 1 level move in your favor is calculated from the level that you're basing the trade on in the direction of the trade. So that would be based on the bull bear KPL. 1 level move in our favor on this bullish trade is R1. So R1 is your level for a scalp trade for either exiting the trade or adjustment. As far as a regular day trade, regular day trades have 2 different levels to choose from. One is a 1.5 level move in your favor, and the other is a 2 level move in your favor. A 1.5 level move in your favor is calculated the same way as we did the scalp trade, simply looking from the level that the trade is based on, the bull bear KPL, and we look up 1.5 levels, which is this midpoint level here. We'll go ahead and move these so you can see this more clearly. We'll go ahead and move these over. All of these line labels have an offset adjustment that you can adjust to where you would prefer to have them on your screen. It moves it to the left or to the right depending on whether you put in a negative number or a positive number. So right now we're moving them more over to the left. All right, so as you can see here, mid R1, R2, 77.8833. The 2 level move in your favor from this bull bear KPL is going to be the R2 level, 77.9692. Okay, so what happens at whichever level that you're going to choose as the initial target? There are three different options for either exit or adjustment at your initial target level. When price hits your initial target level, you can either one, exit the trade 100%, exit 100% of your original position, and then if you're going to continue trading the rest of the session, then you can just look for another trade opportunity after that. Option 2 is not exiting your original position, but simply adjusting your stop loss to break even or break even plus a 10 to 15% profit buffer on top of break even. As noted earlier, when we are starting off our trade, we're using levels for our stop loss, either the tight stop loss level here or the standard stop loss level here. However, when you do an adjustment to break even, then you are adjusting your stop loss to the price that you paid, the executed price on your trade. So $12.90. When it hits any one of these targets, whichever one you've chosen, if you're going to adjust it to break even, then you would be adjusting it to at least $12.90. So you're now adjusting your stop loss from a level-based stop loss to now a price-based stop loss. If you're going to add an additional profit buffer, we recommend 10 to 15%, somewhere in that range as the initial adjustment, because you do need to allow the trade room to breathe. If you add on too much of a profit buffer, you will not give the trade very much room to breathe. In that case, if you're more the kind of person that feels more comfortable adding on a higher additional profit buffer, like 50% or something, you might as well just go ahead and exit the trade altogether, because usually you need to give your trade a little bit of room for further movement when you're doing an initial stop loss adjustment. However, that's up to each trader's preference. That's only our recommendation, 10 to 15%. You can, of course, add a profit buffer on top of that and increase the profit buffer as price continues to move in your favor. Now, what is the third option? The third option is a hybrid. The third option is available if you are starting off with an original position of 3 or more contracts. So if you're trading 3 or more options, then you can utilize this hybrid. The hybrid is meant to collect profit, the majority of the profit of the trade at the initial target, then de-risk the remaining runner positions to hopefully take advantage of a continuation of a trending move in your favor. And as price moves further in your favor, you can keep adding additional profit buffer to your stop loss on those de-risked remaining runners, or decide to exit one or all of the remaining runners at a further key level move in your favor. Now, you're doing the majority of your profit. You're going to close out between 60 to 90% at the initial target. So when it hits R1, 1 level scalp, 1.5 level move, or 2 level move, whichever one of those three you're choosing to use, and you're trading 3 or more contracts, then you would close out when it hits the target 60 to 90% of your original position, and then de-risk the remaining runners by moving the stop loss to at least break even or break even plus the profit buffer. Okay, so we'll go through the different scenarios here with the 77.65 call option. So here on this 9:35 a.m. candle here, we have a hit of the R1 level. So this would be your either exiting the trade 100% or adjusting your stop loss, or doing the hybrid option, closing out 60 to 90% and de-risking the remaining runners. The bid on the close of that candle is $21.30. That's a profit of $840 per option. When it hits the mid R1, R2 level, that's the 1.5 level move. That's the minimum required level move for a regular day trade. That happens at 9:46 a.m. on this candle here. The bid at that time on the candle close of the 9:46 a.m. candle, 27.5. That's a profit of $1,460 per option. Then on the 2-level minimum ideal move, that occurs at 9:57 a.m. So that is occurring, excuse me, the 2-level move is at 9:57 a.m. here, and that occurs here on this candle here. At that time, the bid is 34, and at that time, that's a $2,110 profit per option. Now, anything beyond the initial target is considered an extension of that trade. So if your initial target is the scalp only 1-level move, then either a midpoint level, a main key level, or if a contextual level happened to be after that. In this case, in this session for this particular trade, there is no contextual level that occurs after the R1 level. So if there's no contextual level, then you're just looking at midpoint levels and main key levels that occur after that for extension of the trade. When you have an extension of the trade, if this was your main target to begin with, the scalp, at each extension of the trade, then you're either further adjusting your stop loss by adding on additional profit buffer, or if you're doing the hybrid, then you're taking off one or more of the remaining runners, and that of course depends on how many remaining runners that you have. If you were started out with a 10 lot, for example, and you sold 6 to close out 60% of your original position at the original target, then you would have 4 runners left over. So you could take one off here, take one off here, and take the remaining ones off here as an example. Or keep adjusting your stop loss and just take off remaining runners all at once on a particular key level. Now you're using, in your extension, you're using your ribbon indicators, your guide for continuation of moves. As you can see here, we start getting a transition to a multicolored ribbon here, and with this move running out of steam at mid R2, R3. So if you didn't take everything off here, you seriously want to consider start taking it off when you see this transition starting here of this particular move. Then on the 10:23 a.m. candle here, we have the hit of the mid R2, R3 level. At that time, the bid on the 77.65 call, $49.80. That's a profit of $3,690 per option on your runners that were left. Okay, so now we'll take a look at the other 2 option strikes. Okay, next we'll look at the 77.70 call option. Remember, that was the call option closest to the first midpoint above the level that the trade was based off of. So this is your first out of the money alternative. Our final one is the one level away, 77.79.74. That was the 77.80, which we'll look at next. In this case, the entry price is a little bit cheaper, $10.20. Same entry, same stop losses used regardless of what strike. Same target for exits or adjustments. The only thing changing is a strike. 9:35 when it hits the R1 level for the 1-level scalp. $17.80 bid on the close of that candle, $760 profit per option. 1.5 level move that happens at 9:46 on the close of that candle. Bid $23.50, that's a profit of $1,330 per option. 2-level ideal move, 9:57 a.m. bid $29.60, profit $1,940 per option. On the extended move for runners, mid R2, R3, 10:23 a.m. candle, $45.10 is the bid, profit of $3,490. So you can see here the importance of having runners that are de-risked If you can trade 3 options or more, then you can put yourself in a de-risked position to take advantage of these extended moves for more profits. Now, one thing I want to clarify, why do we call this the minimum ideal move here? As you can see, this is the minimum ideal move, whereas the 1.5 level move is the minimum required move for the regular day trade, whereas the 2 level move is the minimum ideal move for regular day trade. And that is because between 75 and 80% of sessions in a normal year with normal volatility in SPX, approximately 75 to 85% of sessions will have a 2-level extension away or a 2-level extension above or below or a combination of both for the range for that day. So that's generally going to be the extent of most moves. Anything outside of that is going to be an extended move. The 1.5 level move is the minimum required move because that still gives you an extension to R2 or perhaps that. So that's the minimum required move. 1.5 levels versus the scalp is the 1 level move. Now, what happens in the remaining, I said 75 to 85%. What about the remaining 15 to 25%? Well, the majority of the remaining 15 to 25% are sessions that are going to be mean reverting, lower volatility, choppier sessions that are going to range between R1 and S1, a 1 level extension away. So you would still have scalp trades available in those sessions. However, those sessions generally do not go outside of R1 or S1. Then in the minority, the smallest portion of the remaining 15 to 25% are going to be high to extreme volatility sessions. And those sessions you're going to see R3 and above and to S3 and below. So those are going to be the smallest amount of sessions that happen in a normal year. They're only going to be more numerous if we have market meltdowns such as we had during the COVID pandemic phase or in the 06, 07, 08 when we had kind of the market meltdown back then. In other periods of time where we have extreme or high volatility due to world events or other types of things going on. Okay, so entry 1020, $760 profit on the 1 level move, $1,330 profit per option on the 1.5 level move, $1,940 profit on the 2 level move, and then extended runners, de-risked runners to mid R2, R3, $3,490 profit per option on those. Next, we'll take a look at the furthest out of the money, 77.80. Okay, here we have the 77.80. Now, you can see one advantage of this particular strike in the standard daily key level strategy. This is the out of the money 2 alternative strike. Using the 1 full level away, in this case 1 full level above, since we're bullish trade from the BBKPL, 77.80, $5.90 entry. So you can see that's quite a big difference between that. It's quite a savings on that. $5.90 entry. Same, everything is the same as we pointed out earlier. Everything is the same as far as the stop loss is used as the initial entry stop loss. Everything the same as the targets, just simply changing the strike. 1 level move to R1 at 9:35 a.m. $11.80 is the bid, $590 profit per option. 9:46, 1.5 level move to mid R1, R2. $16.30 is the bid, $1,040 profit per option. 2 level ideal move to R2, $1,540 profit per option. The bid was $21.30. And the extended runner moves 2.5 level move to mid R2, R3, $3,000 profit, bid $35.90. Next, we'll take a look at the lotto options. Okay, the early session lotto options strategy. Okay, so one of the main differences in the early session lotto option strategy is one that you're going to be in the early session lotto option trade. Generally, you're exiting this trade before noon. So you're generally speaking, you want to be only in this type of trade and exiting sometime before 12 noon Eastern. So it's between 9:30 and 12. The other thing that differentiates it is the cost. So there's a big cost difference. And the way that you determine the strikes in the early session lotto option strategy is that you look only at the 1.5 level move and 2 level move. So these are the moves for a regular day trade. The mid R1, R2 level, 77, 88, 33. So your first lotto option strike that you consider is the 77.90 call because that is the closest to the 1.5 level move strike. The R2 is the 2 level move, 77, 96, 92. That is going to be your other alternative strike. And that would be the 77.95 strike. Now in this case, we're looking at the 77.95 strike. We're not looking at both of them for today's video. In this case, the 77.95 strike was only an entry of $2.30. So that's a savings of roughly $1,000 over the 77.65 strike. So one advantage is you're putting a lot less money at risk. So if you're just using one contract as an example, with the original 77.65 strike, we'll bring that back up now. The entry was $12.90. Here it's $2.30. So that's over $1,000 savings there. Eventually, this got to $3,690 profit, but we had to put up $1,290 per option. Eventually, this gets to $2,060 profit, but we only had to put up $230 per option. So as you can see here, this is going to make a lot more money in the beginning stages. You're also putting up a lot more money. This, you're putting up a lot less money. You're going to make a good return percentage-wise on a move that happens early on in the session. And if we get an extended move, you're still going to end up making quite a bit of money. One way of looking at it is you're putting up a lot less money. So if you're looking at it from one option versus one option here, you're saving roughly $1,000. The other way of looking at it is if you're willing to put up $1,290, then you could buy 5 of these options here for $1,150. Now, if you had 5 of these options here, when you get to the 2-level move, you're going to have $4,000 in profit, whereas here with the 2-level move, you'd only have $2,000, roughly $2,100 in profit. Here you'd have about $4,100. Then on the runners, you can see that's a big difference too, depending on how many runners you had left. Here, if you're just using one option, then there are no runners. Here, if you're using 5 options, then you do have runners, possibly if you decided to use that hybrid strategy. Okay, so we'll get rid of that. $2.30 entry. When it gets to the 1-level move, R1, $9.35. Bid, $5.50, $320 profit per option. 1.5 level move, 9:46 a.m. Bid, $8.20. $590 profit per option. 2-level ideal move, 9:57 a.m. Bid, $11.10. That is going to be profit of $820 per option. Extended move, 2.5 level move, 10:23 a.m. Bid, $22.90. Profit, $2,060 per option on any de-risked runners. So as you can see here, one thing you want to keep in mind is that when you're using the early session lotto option strategy, you're still using the same stop losses that you would on this trade, that you would on the standard daily key levels trade, and you have the same exact targets for either exit or adjustments. You're simply just changing the strike that you're using, and you're using the key levels in order to come up with that strike. And the strikes here for early session lotto options are based on the minimum required move and ideal move for regular day trades. Another advantage of the early session lotto option strategy is that the amount of money that you're putting up. So again, if you're just looking at this as one option only, it's only $230. So you can utilize these stop losses. You can also have the option of utilizing no stop loss and just considering your $230 entry, basically your cost of the trade. And with such a low cost, you can also consider the alternative of using no stop loss. You generally don't want to consider that as a viable alternative for a stop loss if the option costs, say, more than $5. So that would be for something under $5, ideally something more in the $2 to $3 range, such as we have here. Or just utilizing the standard stop losses here, tight or standard, which is the same as the other strategy. So that's up for traders' preference, just depending on how you would like to utilize it. Okay, so as far as the indicators being available for purchase, you can either buy the SPX Daily Key Levels V3-point indicator by itself, or you can buy it in a suite. The SPX suite includes all three of these indicators: the V3.0 Daily Key Levels indicator, the ribbon indicator, which you can also use for things outside of indexes, you could use it for stocks, ETFs, futures, Forex, and any global market. It does have different resets for stocks, different resets for index futures. It does have different resets for other types of futures and different resets for Forex. And then it has these special reset options that are custom options for global markets here. And you also get the special VWAP, which we went over with at the beginning of this video, why that is important on TradingView for SPX CBOE and XSP, the SPX mini index. So we offer both the SPX suite, which includes all three of these indicators, or you can just purchase the SPX Daily Key Levels indicator by itself. In either case, if you're interested in purchasing either the suite or just the V3.0 indicator by itself, you can email us at daytradinggps@gmail.com to request a discount promo code for lifetime access on either the suite or just the Daily Key Levels indicator by itself. We also offer the suite on a monthly access basis in addition to the one payment for lifetime access. So on the monthly access basis, that is a month-by-month access, so your minimum is 1 month. If you want to subscribe to that, you just simply make your first monthly payment, then you have access for 30 days. 30 days later, unless you've canceled, then you would be charged another monthly access payment, and then you have access for another 30 days. So you can cancel at any time. If you do not wish to continue with the monthly access and perhaps you want to switch over to one payment for lifetime access. We do not offer promo codes on the monthly access plan. That's mainly for people that just feel like they just want to try it out. There are no discount promo codes for that plan. However, on the one payment for lifetime access, we do offer a substantial discount on that for either the SPX suite or the SPX Daily Key Levels indicator. That is the best value as it gives you lifetime access for one payment. Lifetime access also includes any updates we make in the future to any of these indicators. For example, with the SPX suite, all three indicators, or with just the SPX Daily Key Levels indicator by itself, it would just be for that one indicator. So any updates are included. Any future versions, if we happen to add a future version, let's say we go to V4.0 as an example, and we add additional features, then that is also included with lifetime access. With the monthly plan, it's also included, but you also have to have a paid subscription. So if you've canceled, then obviously you would not have any access after that. Okay, so again, email us at daytradinggps@gmail.com to request a discount promo code. Also, you may be wondering how these indicators and trading strategies have been working for people who have purchased our indicators. We have well over 100 people who have purchased our indicators and use them on a daily basis. And what we would like to do is show you the feedback and reviews that we've received from people who have purchased the indicators and use them on a daily basis. You can see the feedback and reviews for yourself by going to our website on WOP, so that all of our indicators are marketed through WOP.com. That's WHOP.com. Simply go to WOP.com, that's WHOP.com/daytradinggps. Click on the reviews button, and then you can look at all the different reviews for yourself. What we'd like to do to close out the video is we're going to show you screenshots of various feedback and reviews we've received from our customers who utilize the indicators on a daily basis. If you did like the video, we sure appreciate it if you would hit the like button, as that helps us with the YouTube algorithm and helps expand our channel. So we greatly appreciate that. Also, if you'd like to subscribe to the channel, you'll be notified if you do want to subscribe when we post videos on any trading topic, or any of our session videos, or any videos on any of our other trading indicators for futures, forex, stocks, ETFs, cryptocurrencies, and also the NASDAQ NDX index. Thank you again for watching today's video, and we appreciate your support of this channel, and we wish you much prosperity in all your future trading.
For those interested in seeing how other traders are using the indicators and the daily key levels trading framework, here are some reviews and feedback we have received from customers who have purchased and used the indicators. While individual results will always vary based on experience, risk management, and execution, these reviews provide insight into how traders are incorporating the daily key levels indicators into their own trading processes. You can view additional customer reviews and feedback at daytradinggps.com. Thank you.